Hi guys, I'm Virchan. In this video presentation, we are going to learn the part 3 of principles of double entry. In the last videos, we have learned about principles, the basic of principles of double entry. If you haven't watched that videos, I have given the links of those videos in the description. So go to that website and just go through them and join in this video. If you are new to this channel, don't forget to subscribe it. Let's go to the part 3 of principles of double entry. In the last videos, we have learned up to 6th example. In this case, we are going to learn about sales. When we are studying about purchases, I have told that purchase is an expense. When we are buying, I'm going to spend my money. So in this case, cash sales, when I'm selling the product of mine to customers, I will gain money. They will pay for me. They will pay for my business. When they are buying anything, any product from our business, from my business, they are going to pay back for me. So in this case, what's mean by cash sales? When when I'm selling the product, they are paying at that moment. So I'm going to tell that cash sales. So in this case, we already know sales is an income. So let's go to the chart. Uh, According to the chart, when there is a sales, the asset will increase. That means I will gain the cash. The asset is going to increase. At the same time, the income, we have categorized the sale is an income. Purchase is an expense. So in this case, sale is going to increase. So what can we do? When there is an increase in asset, we are going to debit the cash account. At the same time, there is an increase in the income account. So we are going to credit the sales account. So let's go to that example. Cash sales. So we are going to debit cash. At the same time, we are going to credit sales account. So be clear with that. The next item we are going to learn is credit sales. We have already learned this part in the purchase too. So when we are selling those products, the customer will tell, some customer might tell that they will pay in the near future. So in this case, they should pay us. So we are going to categorize as asset because we will get money from them. So it's an asset for us. So have a we have another name for debtors or customers as trade receivables. That means they have bought items, bought goods from us. They will pay us in the near future. They are an asset. So be clear with it. Trade receivable is an asset. When I'm selling those things to trade receivables or for credit, the asset, the trade receivable is going to increase. The asset is going to increase. At the same time, sales is also going to increase. So we can tell when there is an increase in the asset, we will debit the entry. So we are going to debit trade receivable. At the same time, we are going to credit sales account because there's an increase in the sales account. So be clear with it. We are going to debit trade receivable asset and we are going to credit sales account, which is an income. The next thing we are going to learn is sales return. It's nearly equals to purchase returns. When we are purchasing, if there are any goods without or it's not in a good time, we are going to return it. Like that, when we sell items to them, the customers also feel that it's not in a good way. So they will also return to us. So in this case, we won't register the returns in the sales account. What we do, we will create another account called sales return. As we all know, sales is an income account. We consider sales return as an expense account. So let's go to that chart. When they are returning the items, when they are returning the sales items, the expense, the sales returns is going to increase. When they are returning, the sales return is going to increase. So the expense is going to increase. At the same time, the money we will given by the customers is also going to decrease. Let's say I have sold the goods for $5,000, but the customer has returned the goods amounted $1,000. So in this time, I will be given only $4,000 by customer. So trade receivable, the asset is also going to decrease. So we can tell we should debit this expense. So we are going to debit sales return. At the same time, we are going to credit the trade receivable, because the asset, the trade receivable amount is going to decrease when there's a sales returns. So the next item we are going to learn in this video is rent paid. As we all know, rent is an expense. So when we are paying to rent, the expense, the rent amount is an expense. The expense is going to increase. So what can we tell? When I'm paying for the expense, there's an increase in the expense. When I'm paying back to the expense for rent, the cash is going. That means the asset is decreasing. As we all know, when there is an increase in the expense, we are going to debit the expense account. At the same time, we are going to credit the asset. Because the cash is an asset, we are going to spend the cash for it. So the entry for the rent paid is, we are going to debit the rent and credit the cash account. So we have studied all the items, all the main items in those 3 videos. I hope you will be able to figure out the double entries for other transactions also. So do watch other videos in our channel. Don't forget to subscribe and share with your friends. Thank you.